Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, in the last 24 hours, the market has been very volatile, and also with the Australian dollar changing its direction very sharply. The Australian dollar rallied in the early hours of this morning after a more dovish Fed Powell speech to the Economic Club of New York. In the early hours of this morning, the Federal Reserve Chairman Jerome Powell said interest rates are still low, but historical standards, and they remain just below the broad range of estimates of the level that would be neutral for the economy. That is, neither speeding up nor slowing down growth. The speech from the Fed was a change in tone from early remarks that the central bank chief made earlier, about 2 months ago, when he said the just below language is different from the long way from neutral. Nevertheless, with the slight turn in view from Fed Jerome Powell, does give some question now and puts December rate hike in jeopardy. And now, from being inked in, now talks of being penciled in. The central bank has already hiked rates 3 times this year, but still we have the weekend to come is the summit, or G20 summit, between President Trump and Chinese President Xi as the next major risk. Therefore, due to this, and also the heightened tensions of the critical summit, is my view will be neutral. Purely for the fact is that if a deal is on the table between the two countries, this could actually give some ramification in terms of where the Australian dollar can go. So at present, there is a little indication to give me from the MACD. And with the resistance taken out at 72.60.80, now gives some concern that the market is a bit directionless in terms of levels. But a close under 73 cents would give some indication that the bears are creeping back. The euro, along with the US dollar index, posted outside range days. Bullish to the euro and bearish to the US dollar DXY. Also to note, it did bounce off this level at 112.60, and from the outside range day, of course, from the two, we do need confirmation. If we don't get that confirmation, then it will be negated, and therefore still view that the euro can fall lower and towards the region of 111.60.80. At present, the resistance is seen at 114.10 to 114.65, but let's keep an eye on this to see whether the outside range day is supportive. It has somewhat changed the pattern of the MACD as well, so the next 24 hours is crucial to see how the market plays out. The dollar yen backed away from this top side after briefly posting a high above 114 of 114.02, is the market is actually finding a bit of weakness into the pattern. Now, I did have a view that a rejection from now seen as probably the third time at 114.20 looks back towards the support region of 113.20.30 with the buy or demand zone seen at 112.15.20. Well, it would seem that the bull stepped in quite hard, and as you can see, in front of that level of 126.90, has put a bit of momentum back into the pound. Earlier in the night, the Bank of England warned of a no Brexit deal would cause a historic downturn. The Bank of England Governor Mark Carney said that the bank is prepared for the worst possible Brexit and that the UK faces the steepest economic slump since at least World War II if it crashes out of the EU without a deal. The recent approval from the EU on the Brexit withdrawal has now left the Brexit ball, as so to speak, in the hands of the British lawmakers. Now, a vote on the agreement has been scheduled for December the 11th, so eyes on that to see what happens. But for now, the market is still trading within this band of 126.90 to 129.5, and nothing inside that, unfortunately. As you can see, the market's very noisy and whippy, very hard to trade. So I'd rather look outside the parameters where the market is actually going. Well, the gold stepped up in front of the level of 1,210, and from the bounce now looks further to the upside of 1,222 to 30. I still believe the market can get to the top side range of 33 to 36, but probably see profit takers there. Support, any pullback, should still recognize 10 as a base. And wrapping up with oil, we're looking at the weekly chart. You can see the market has plummeted now to the level of $50. I did give some warning that the fact is I wasn't overly convinced of the pattern. And therefore, from the breakdown, if we see a move under 49.80, then I would see a further view of $45 a barrel. Any turnaround? Well, as you can see, the market did reject. If we go to the dailies briefly, it did reject that level of 52.5, and it still acts as a cap for now. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.